From Eiton Capital, financial advisor, very seasoned. We had Mr. Tonny Mugisha in the building, and today he has returned, and he's going to be taking us into a topic that we had touched on a bit last week.
Yeah.
But today we're definitely going to dive much deeper. Welcome to the show, Tony.
Thank you so much.
Great to see you this morning.
Good to see you, Ronnie.
Good to see you too.
Ronnie, you are not here.
I'm in class. I'm in class.
You are in class. Okay. But just something about Tony. He is a financial advisor, as Chair said, with a vast experience globally. He's worked for large enterprises, that is FedEx, Aramex, and Vivo Energy. Yes. So he's married to his wife Shailene, whom they co-founded Eiton Capital together, and they are passionate about skilling Ugandans in the finance sector, finance area. And he's married for the last 11 years. Congratulations.
Thank you.
One wife. That one is important today.
Right.
4 kids. Yeah, so we talked about insurance. We started with that.
Yes.
And we broke down the different kinds. There's the general.
Yes.
And then there's also just take us a quick
recap. All right.
Yes.
Thank you so much for hosting me again. I think in the last show, I think it was last week, we talked about financial advisory and the areas that it covers. And I took you through that. There is risk management, there is asset management, there is family office, and the corporate financial planning. And those are the areas that any financial advisor at least should have a background. And then along the way, they're in position to specialize. And I actually mentioned to you that I had specialized in 2 key ones, which is a family office, where I work mainly with families to see how to progress them from one generation to other generations of transferring wealth. And then also corporate financial planning, where we work with organizations to ensure that there's legacy in business, and also making sure that we take care of the risks that they probably have, and structure benefits that can hold staff for quite some time. So those are my 2 areas of focus, but I'm quite conversant with the others. Yes. And in there, we also discuss about insurance and how insurance is very critical across all the 4.
Right. Wow. And Che had so that was a recap, a quick one. But today we talk about life insurance.
Right. Tony, if you could just tell us more about the life insurance cover, because it's something that we touched on last week, and personally, okay, maybe he might not have shared this on air, but Eki and I were privy to a very scary circle, that Tony drew for us.
Yes.
And I don't know if he can possibly illustrate it as best as you can. Just using words. Try and illustrate that circle as best as you can.
Fantastic. And I actually do something special for Power FM.
Okay.
What I'll do is I actually have a video for that.
Okay.
And I'll be happy to share it with you, and then maybe you can share it with the listeners.
Oh, okay.
It really takes them.
Very thankful.
Thank you.
Fantastic. But the circle of life is basically shows us of our journey in life, which is I think many people have different numbers. Why those numbers are special to them? Some are sports fans, others those numbers have a special meaning to them. But I shared with you that the most special number is 28,000, and that is the number of days an average person lives, which is approximately 76.7 years. And if we say, let's stretch it a bit to 80 years. And I hope the listeners right there can probably right now draw their circle.
Yes, start drawing the circle.
So when you draw the circle, you then divide it into 4 spheres by drawing a line from top to down and sideways. So from top, you put 0 to 20.
Going clockwise?
Clockwise.
Yes.
Then 20 to 40.
Okay.
Then 40 to 60. Then 60 to 80.
Okay.
All right. So let's start with the first quadrant, which is 0 to 20. Pretty much around that time, we are studying. We are exploring.
Yes.
We can fool around. So that's pretty what happens in that first
You're
quarter.
excited, life, you're
Absolutely.
budding.
School,
there are
you're
so many
deciding what
hopes
you want to
and
be.
dreams.
Absolutely.
Yes.
Yeah.
Then the 20 to 40 is we get our first job.
Okay.
We get our first business if you're from a business family.
Yeah.
We can afford to buy our first car. Along the way, we meet our partners. We get married. We have the kids. And if you're lucky, you can probably have your first home around that quadrant, which is
if you're focused enough.
20
is
to
focused.
20 to 40, yes.
Yeah. That is also the time that young people are chopping the money.
Absolutely.
Yeah.
Absolutely. Then 40 to 60 is where you now, with a bit of experience, you can get your second job or third job. You probably have a second business. You can afford to buy your second property, which this time could be an investment. You can now probably buy a newer car because you've been driving that junk for quite some time. But remember, the most critical thing in the previous quadrant, you had your kids, but now your kids are living their first sphere. They are living from 0 to 20. So draw an arrow from that quadrant to 20, which should indicate to you that your kids are now living your first sphere of life, just like you did.
Yes.
And then the last one is retirement, 60 to 80. Many times we think we cannot retire, but our body gives way. Our bodies give way. But pretty much to say that someone retires, set about 60 years onwards to 80, God gives you a life. Well, the most interesting part are the top two spheres.
Okay.
Okay.
That is the
20 to 40.
20 to 40 and
0 to 20
0
and
to
60 to
20.
80.
And 60 to 80.
60 to 80.
Yes.
Okay.
Absolutely.
Top two. Yes.
Top two. So you take it out because pretty that much you don't have any income in there, because here you're in retirement, this side you're in school. So there is no income.
There's nothing coming in literally.
Absolutely. So take that out.
Yes.
Right.
Okay.
Yeah. Now, all our listeners, just double check how old you are, draw a line and name it, whichever quadrant you are. You probably say you're 35.
Yes, take an example
Yes.
of me, 35.
Absolutely.
Wow.
So draw your circle
6.
35. So you remember the first two quadrants have gone out. So we started with 28,000. So we have 14,000
Those
days
years are already gone.
already gone. So if you're 35, another part is gone. If you're 40, another quadrant is gone. You only have the one quadrant left.
Higher pass.
All right. And the most interesting thing is from 40 of 35 to 60, that's how much time you have to live your aspirations, those of your parents, for your kids, your spouse, and among many other things.
Bucket lists.
Absolutely.
Yes.
So that time is very critical. And there are 4 fears during that time. And I think that would be the next thing probably we're looking
Yes.
Right.
The 4 major fears
that everyone has.
Yes.
Not only me, but everyone in the studio and everyone listening out right now.
Okay. If you have questions, do send them to us on 0753104104. If you have just realized that you are in the last quarter and you have nothing to say.
First is, what if I can't work to 60?
Yeah.
Remember we said our retirement is 60 years. So what if you can't work to 60? What could stop you from working up to 60? It could be a permanent disability. I mean, we are always on jumping on borders and the different risks that we have, even in a car. You could probably have an accident and we get permanently disabled. You could get a critical illness that does not allow you to work. The second fear is, what if I don't make it to 60? Which is inevitable for everyone. What could stop you from living up to 60 is death. It's inevitable to everyone.
It's appointed for
And
everyone.
absolutely.
At a certain time you will die.
The ratio is 1 to 1. No one has a different ratio.
Yes, that's so
Yeah.
true.
And the third one is, how much is enough to retire? That's a very
Big
critical
question.
Right.
They asked me that question.
I mean, I grew grey hair here.
Calculations.
I grew a grey hair
My
here.
eyebrows started.
Absolutely. And we're all different. We all have different aspirations in what we want to do
Different lifestyles.
for retirement. And these days when I engage a number of people, they tell me they want to retire. Some say 55, others say 40. Lately, I'm also having people telling me, listen, I want to retire at 38. And it's their own right. Because, but each of us has what they want to do when we retire. I guess we are living in a very interesting time because it's a hybrid retirement time, because people are doing whatever they would have liked to do in retirement. They're doing it right now. So the fourth fear, which is, what foundation do I want to leave my kids so that they can have a fair start off in life? So those are the 4 fears.
So the first is,
What if
I can't work
up to 60?
up to 60? What if I don't make it
what
up
if
to
I
60?
die?
Yes.
Then the third is,
How much is enough to retire?
okay.
All right.
And then the fourth is,
What foundation do you want to leave your kids to start off fair off in life?
These are 4
Four
critical
valid fears.
questions where that need you to sit. In fact, do a retreat. Go and sit down, think through your life, and then when you decide, you come and talk to Tony.
Yeah.
Yes.
And the most interesting thing is, those 4 fears are the foundation for life insurance. And that's why I thought to share with them. Those are the foundations for life insurance. Because most of the people know about the 4th, which is
what do I want to leave
for your kids. So that's why you see many people have taken out different education plans that are being issued by the different insurance companies, and that's a great start. It's a great start. But the other three fears, no person usually talks about those other three fears. So for sure you will retire. All right, whether you want it or not.
Yes.
The matter is at what age. The second one is usually die. Absolutely, there's no question. It's an issue of when.
And the Bible says no one knows when she will die.
Absolutely.
Yeah.
And those two, unfortunately, they're not within our control.
Yeah.
The others are within a bit of our control, because you can take out education plan for the kid. You can plan your retirement. Some of you have your NSSF plans. You've done a bit of investments here and there. But again, in all those things that you've done, none of them does what life insurance does.
Okay.
And that's pretty much the foundation for life insurance.
So do go ahead and tell us about this life insurance. I know that there was a time we did some calculations.
Yes.
And even with the last question. but yes, now that we have these four.
Yes.
We have the circle.
Yes, the four things.
Yes.
What next?
Okay, fantastic. Good question. The thing is, I think usually people say, how do I start? I think the best way for me to go about it would be, who qualifies for life insurance?
Yeah.
Any person that has dependents. They could be kids, they could be spouses, they could be parents, they could be siblings. So long as those dependents depend on your income, you definitely need to have life insurance.
In other words, are you trying to say that anyone who has started working in some sort of work, because we have dependents, the moment you start earning something small,
Yes.
You will get dependents.
Yes.
Yeah.
Yes, true. You have to. Actually, there's a rule of thumb. There's a rule of thumb. I like using the example that, there's a rule of thumb. I like using the doctor's recommendations. They say you have to take 8 glasses of water a day. There's a rule of thumb on those 4. 20% of your income should be going towards life insurance.
20%.
20%. So if you're a Christian, I believe the 10% is already gone off for tithe.
Yeah.
So 20% goes off. So that 20% protects the other 70%. Should anything happen.
Yeah.
Okay. Then there's also a rule of thumb for education. If you have children, it's recommended about 5% of your income should be going to education plans. I like to beautify that and make it child trust funds, because today it's becoming a bigger challenge, because people are finishing school and have nothing to do. So we need to figure out, when I'm working with families, I do advise them, you need to start thinking about the children trust funds, so that once they're done with school, you can have a fund where you can tell them, listen, as you wait for that opportunity, bring me a business plan. I'll be in position to give you a bit of money to start. We see how it goes, and then if it's better in 1 year, I'll probably add you more money. So I like to engage families to think about the education plan, but also think about the children trust funds. I think that's pretty much what you need to know about. Now, for retirement planning, again, like I said, everyone has a different plan. So you need a financial advisor to sit down and see what you have planned and help you think through what other alternatives you may have. All right? On all the 4. And the thing is, one thing that's very critical, every single year, you need to sit down with your financial advisor to go over these 4 fears to make sure that they're aligned. They're aligned with your aspirations. The thing with life insurance, many people go out and get policies without sitting down with a financial advisor to advise you. So you find either they're inadequately insured or they're over-insured. So you want to be replaced whereby at least you have a balance for both. Yes.
Yeah.
At the end of the tenure, all right, without
20 or 30 years,
it comes back plus interest. So you're using your savings. Right now you have money in the bank, but it's not earning you any interest. Absolutely. So life insurance is the only insurance that does that protects you and also gives you a return on your savings.
Wow.
That is something to think about.
Something for you to think about.
So you've asked me a question about who do we go to? There are a number of insurance companies. As a financial advisor, I structure my policies. I wouldn't like to go on air on who I use, but I have my own reasons on who I use. But what I want to tell you is when I engage you as an individual, I'm in position to give you the value of what to use, because many people will probably go out there and don't know what provider to use. And that's where I come in.
So where do we reach you? How do we reach you?
Absolutely. My I can share my number.
Please do.
My number.
Someone is up there
Absolutely.
Pick your pen.
Yeah.
Pick a paper or get your phone. Yes. Get this.
Yeah.
Number.
My number is 0752 103 996.
0752 103 996.
All right. You can also email me at Tonny, TONNY, at Eiton Capital, which is EITON, then capital as one word, .com. My social handles are Tonny.finadvisor. I'm both on Instagram and also on Facebook.
Wonderful. At this point, what is that last thing that you'd like to leave with us?
With our listener.
Thank you so much. If anyone is there and thinking about life insurance, if you cannot afford to die, you need life insurance.
Tony.
You
talk badly.
Because if you can't afford insurance right
Yes,
now,
yes.
you can't afford to die, because you can imagine the people that are dependent on your income. If anything does happen to you, definitely those people are going to be affected. But above that, I think there's no asset that does what life insurance does. And I'll just wrap this up, because it ideally tells you that if anything happens to you, I'll pay you this amount of money, which policy you've taken out. There is no investment that does that.
Completely.
It's basically you're paying a fixed deposit, but paying it in installments.
Okay. And so when you do your calculations, you can also start small and keep growing
Yes.
your deposits. Yes.
Now, it also depends on the financial advisor you have, because it is an area of expertise. So it's very critical on who you use as your financial advisor, because the thing is, they're in position to guide you. Because, for example, the policies I structure, you're in position to increase them annually as a new member comes into your family, as you get married, like Eki, you're planning to get married very soon.
Yeah, just next week.
Absolutely. So every year, as you sit down, my policies, there's an option for you to increase your premium. You cannot go down, but you can go up to make sure that you meet your